Today, I'll be breaking down the stock market for complete beginners. I know that can be confusing at first, so I'm going to make it very easy and simple for you guys to understand. If you can, please watch till the end so you can get a solid understanding of the basics and hopefully be ready to invest and make some money yourself. And before we start, a great principle to live by is to never invest more money than you can afford to lose, especially as a beginner. So let's get started with what is a stock. A stock is a tiny piece of a company, and when you buy a stock, you become a part owner of the company. The stock market refers to the market as a whole where all the stocks of the publicly traded companies are held and sold. So when you look at Apple, for example, you can see that the price is $139.96. This price is how much an Apple share costs today. If you were to buy one share, your investment would be worth $139.96. If you were to buy two shares, your investment would be worth around $280. So let's look at one more example. If you bought one share of Microsoft today, your investment would be worth $277.94. And if you bought two shares of it today, it would be worth $555.68. To get your total investment in the company, you just have to multiply the amount of shares you have by the price. Please note that the price alone of the stock does not determine if it's a good investment or not. A higher stock price does not mean that the company is bigger than another company with a stock at a lower price. That's because each of these companies puts out a certain number of shares for everyone to buy. Even though a Tesla share costs more than an Apple share, Apple is much bigger because they have around 16 billion shares out in the market, while Tesla has only around 963 million. So if you multiply the stock price by the outstanding number of shares, you will get the market cap. This is pretty much how big the company is according to the stock market. So Apple has a market cap of roughly 2.4 trillion, while Tesla, whose stock is priced much higher, has a market cap of 632 billion, which is much lower than Apple's market cap. The price of the share changes every day, so it can go up or down. So basically, if the price of the stock goes up tomorrow, that means that your investment is now worth more than you bought it for. This is how you can make money in stocks, and I'll go more into that later. And on the other hand, if the price of the stock were to go down, that means that your investment is now worth less than you bought it for. And if you were to sell, you would lose money. And one thing to note is that emotions have a big impact on the stock market. When the pandemic hit, the whole stock market dropped. That's because everybody was very scared and they started taking money out of the market. Now things have gotten a little bit better, so people have put money back into the market, and the market is now hitting record highs, right? Because everybody feels a lot more comfortable now, everybody feels safe, so that's why they're investing more in the stock market. Basically, when a lot of people take money out of the market at the same time, the market goes down, and when a lot of people are putting money into the market goes back up. So next is why invest in stocks? Two reasons. First is to make money, and second is to beat inflation. Inflation causes your money to lose value, and this happens because the government is printing money every single year. And this past year, they've printed a lot of money, so that means that inflation is going to be very high. So that means that the money that's sitting in your bank account is losing its value. You're not going to be able to buy the same amount of things with it. I suggest having an emergency fund of 3 to 6 months of expenses and savings for any other business ventures that you might have or whatever else it might be in your situation. But other than that, everything else should be in the stock market or invested somewhere where it'll make you more money. Because if it isn't invested, then you're just going to be losing money because of inflation. So now, how do you actually make money with stocks? There are two simple ways to do that. First is to buy low and then sell high. I talked about that briefly a little bit earlier. So let's look at Apple. If you had bought an Apple stock a couple years back on January 25th, 2019 at $39.44 and then sold today for the $139.96, then you would have profited over $100 by selling that one Apple share. Now, a short-term gain example is if you bought a Tesla share at 3:15 p.m. today at $653.75, and then you sold around half an hour later at 3:55 for $657.39. Then you would make around $4 from that. This type of strategy where you buy and sell the stock on the same day is known as day trading. I personally don't day trade, but I do know that it is very risky and very hard to make money from, so I don't suggest doing it. That's one way to make money. And remember, it also works the other way like this as well. So if you were to buy for $140 today and then sell tomorrow for $100, then you would lose $40 in the stock. So here is a Tesla stock example where you would lose money. If you bought on January 26th for $883.09 when it was at an all-time high and sold today at $656.95, then you would lose $226.14 because you sold at a lower price than you bought it for. The second way to make money is from dividends. Dividends are just a percentage of profits that the company passes back on to their stockholders. And usually dividends are given out every month or every quarter. Not all companies give dividends, but a lot of them do. So Apple gives dividends. So if you buy an Apple share, you're now an Apple shareholder. You're a stockholder. That means that every quarter, Apple will automatically deposit a dividend into your broker account. In 2020, Apple gave around $3 in dividends. So if you were to own 100 shares, that means that you would have gotten $300 in total dividends for the whole 2020 year. So if you were to buy hundreds or thousands of shares in a certain company, then the dividends could really add up and end up being a passive income stream for you that you really don't have to do anything for. So the best strategy to make money with stocks is really just to buy and hold, especially for beginners. Some other advanced strategies are swing trading and day trading, which I won't be going over. They're just really risky and they focus on making money in the short term, and I do not suggest them at all. Buying and holding over the long term also has its tax benefits. So really quick, I wanted to talk about how the gains in the stocks are taxed. If you buy a stock and sell it before holding it for a year, you're taxed at your normal income rate. But if you hold for longer than a year, you're taxed 0, 15, or a max of 20% depending on your income level. So for people whose normal income tax rate is higher than the 0, 15, or 20%, which I hope it is, it might be better to hold for the long term so you can pay less in taxes. And these are the tax laws for the United States. If you're in a different country, make sure you look into your own tax laws. Now you might be wondering, how do I know which companies to invest in? To truly know, you'll have to smash that like button. I'm just kidding. You have to do research on the companies. All of the financial statements for companies in the stock market can be found online, and I suggest learning how to read those statements so that you can get a good understanding of how the company is doing. Looking at the financial statements is the only way to know what's actually going on inside the company. Don't just believe anyone on social media, including me. Always do your research. Maybe also read some articles on these companies from CNBC and other news outlets and see what their growth plans are. And if you really believe in the company and you think it'll do well in the future and make a lot of money, then yes, you should invest in the company. Now, if you're kind of lazy and you don't want to do any of this research, then you can invest in blue chip stock. These are massive companies that won't go out of business anytime soon, and they'll only continue to grow. Some examples of these companies are Apple, Amazon, Coca-Cola, Walmart, and there's a lot more out there like that. But an even better option is investing in index funds. So here's an example of one. The S&P 500 index fund is great for beginners. It has averaged an annual return of 8% in the past 50 years. And index funds are just like a portfolio of a bunch of different stocks. So for the S&P 500 index fund, there are 500 companies in that fund. When you invest in that index fund, you're putting little amounts of money in each of those companies. So if one company were to go out of business, you wouldn't lose all of your money, right? Because you still have 499 other companies that you have money in. For example, if you were to invest all of your money in Tesla and then Tesla goes bankrupt, you lost all of your money. But if you had invested your money in an index fund and Tesla goes bankrupt, then that's just one of the many companies in that fund, and you probably won't be losing money overall. And that's why they are low risk. So they have decent returns, and Warren Buffett is a big fan of these because you don't have all your eggs in one basket and because they're low risk. So to invest in this index fund through a typical broker like Robinhood, you would need to invest in ETFs. Just think of ETFs as another single stock you can buy, but instead of tracking a single company like Apple, it tracks the S&P 500 index. A couple of the ones that I'm currently invested in are SPY and VOO. There are multiple ETFs out there that track the S&P 500 index, but those are just two of the ones that you can look for with your broker if you would like to invest in them. You can become a millionaire by constantly investing in the S&P 500 index fund. Next is, how do you buy a stock? With all the brokers out there nowadays, you can start investing with as little as $1 because a lot of them offer commission-free stock trading. Some of these platforms are Fidelity, Vanguard, Public, Robinhood, Wealthfront, and many more. They all work, and I personally have multiple accounts, so look into these brokers and see which one you like the best and create an account with them. I won't go into too much detail about the specifics of the app and how you buy the stock on there, but once you make an account, it's really simple. A lot of these brokers have made it very easy to buy and sell stocks. So after you've made your account and connected your bank account, all you have to do is find the stock on there, click buy, and once the order is completed, the stock will be yours. I do have some links in the description for free stocks if you'd like to sign up with the broker that I use. Now you're ready to invest in stocks and hit the ground running. If you found value in this video and you want to continue learning about money, then hit that subscribe button. Thank you so much for watching, and until next time.